Welcome back to another video. So some of you have requested to talk about platforms that offer the highest interest rates and perhaps also share some of the background stories from various P2P lending sites. So that's exactly what we'll be talking about today. In this video, we'll be briefly reviewing the P2P lending platforms that offer the highest yields and whether the higher interest rate is worth the risk. If you enjoy this type of content and you are new to this channel, please consider subscribing and also hit the like button to see more videos like this in the future. So let's start with the first platform, which is Crowdestor. Crowdestor is a platform that offers investments in business loans from all around the world. The loans are basically separated into three segments. Loans for SMEs, which are small and medium enterprises, real estate-backed loans, and specialized loans, which are loans from various industries, such as the agricultural industry or the energy sector. If you go to Crowdestor's website, you will see the advertised interest of 20%. This is apparently the average earnings that investors earn by investing in Crowdestor's projects. Well, a short review of their statistics will reveal that out of 285 projects, 44% are current, 46% are delayed, and 9% are in recovery. Do not pay too much attention to the capital loss, as Crowdestor, like many other platforms, won't show bad debt until the entire recovery procedure is over, which can take several years. Crowdestor is known for higher yields but also high-risk investments. Most of the projects listed on the platform are not backed by liquid collateral, which could be sold in the case that the borrower decides not to repay the debt. Crowdestor does only share the number of projects that are delayed or are in recovery. The platform, however, does not share the investment amount that is currently at risk, which I think would be a much more interesting piece of information. Due to the rather low protection of your investments, you can be certain that there will be a loss, as so far we haven't seen a proven track record of Crowdestor's recovery rates. So this means that the average yield which is being presented on the homepage is not really valid. I can also confirm this by myself. I invested a couple of €100 on Crowdestor back in 2018. Now in 2021, several projects in my portfolio are delayed. And if none of them get repaid, my net return on Crowdestor will be around minus 35%. So now let's have a closer look at one of the projects which is currently open for investments. So here's a project called Canned Fish Production. The borrower wants to lend €80,000 in this round. The investment will be used to overtake leader positions in the Baltic market. Well, whatever this means. As this project is in the SME sector, you are able to review some of the Crowdestor's ratings. I highly recommend reading the entire report, which you will find at the bottom of the page. The loan is backed by a private guarantee, which is really not worth that much in this case. If you scroll down, you can get some information about the company and download the credit as well as the financial report. The financial report is not in English and it's not really an audited financial report. However, by typing in the name of the company, you can open the English version of the business registry to learn more about the borrower. In this case, for example, the company is owning around €90,000 in tax debt. When reviewing the credit report, you will learn that the borrower is going to pay an interest rate of 50% per year. You can also notice that the company's score is 563 out of 1,000 points. And if you scroll down to the first attachment, you will learn that the company has barely made the requirements to get funding from Crowdestor. Unfortunately, there is no mention of financials from 2020, which would be more relevant in my opinion, and investors would be able to make a more informed investment decision. Judging by Crowdestor's credit rating, APR of 50% and tax debt of €90,000, this project is certainly not risk-free. On a positive note, the borrower is repaying the outstanding balance as well as the interest on a monthly basis, which will continually reduce the default risk. This is something most of the projects on Crowdestor don't offer, as the loans are typically repaid or not repaid at the end of the loan term. The next platform that offers relatively high rates is Viventor. The platform advertises an average return of 13.6% per year, and this is another false claim. Based on their statistics, the platform paid out over €3 million in interest. However, due to the platform's poor monitoring of their lending partners, Viventor has just recently logged more than €6 million worth of investors' money, since Atlantis Financiers isn't fulfilling the obligation towards their investors. What's even more worrying is that Atlantis Financiers is owned by the same financial group as Viventor. So there is clearly a conflict of interest here. Viventor doesn't have a good track record of recovering funds, so the risk of losing money on this platform is quite high. In total, more than €8 million worth of investors' funds is currently at risk, and that's much more than the investors have ever earned on this platform. I won't be even mentioning which two lenders are currently still offering interest rates of 14 to 15%, as the poor performance of this marketplace should be alarming enough to avoid any further investments on this platform. If you've been following our newsletter on P2P Empire, we have actually warned you several times last fall, and there was still a chance to liquidate your investments. Luckily, we managed to exit our testing portfolio on this marketplace without any losses of capital. Next on our list of high-yielding platforms is Lendermarket. The platform offers investments into loans from Crowdestor, which is a lender that operates mainly on the European market. The company originates loans in Sweden, Finland, Poland, and in many other countries. They offer typically between 15 and 16% on their unsecured consumer loans, and the borrowers are paying an APR of up to 1,700%. The P2P lending site is not very transparent about their team, and they don't even offer a dedicated statistics page, so you have really no idea how they are performing. Their lending company, Crowdestor, does however publish annual financial reports, as they do list their bonds on Nasdaq Baltics. Like the earlier mentioned two platforms, Lendermarket is also not regulated. When we reached out to them and requested an interview to learn more about their loan originations, they have declined. And also when we first tested the platform in early 2020, we have spotted several errors in their terms and conditions. So another high-yielding platform is Bondora, and the platform lists loans with an average interest of 31%. The promoted net return is at 8.5%. This will likely be reduced in the future as more and more users are using the Go and Grow product, which yields 6.75% per year. If you don't want to use the Go and Grow product, you can also invest in loans by yourself and try to get a higher interest rate. However, judging by the amount of delayed and defaulted loans on Bondora, you will likely not yield the highest returns. Bondora does offer you the opportunity to download their loan book and have a look at their portfolio, which is something the earlier mentioned two platforms do not provide. Bondora also publishes financial reports and has a lending license in Estonia. So now we have covered a few platforms that offer higher yields and are mainly active in the consumer lending segment, as well as in the business loan category. So there are a few more real estate platforms that offer high yields. Those platforms are BulkEstate, CrowdEstate, and Reinvest24. All of those platforms offer high yields only in specific markets. So on BulkEstate, for example, you can earn between 13 and 14% by investing in Latvian real estate-backed loans. CrowdEstate offers higher rates for their real estate projects in Romania, which yield around 15% per year. And Reinvest24 offers around 14% interest rates on real estate loans from Moldova. While we are aware of a few defaulted projects on CrowdEstate, we have no knowledge of any losses for P2P investors on BulkEstate or Reinvest24. You should, however, always do your own research and decide for yourself whether you want to expose yourself into those markets where you can earn higher interest rates. So now you have an idea about the platforms that offer higher interest rates. What most platforms have in common is that they are not regulated and they do not have a license which would increase the protection of your funds. You should know that the lending license in a dedicated country is regulating only the lending activities of the company, but it's not helping to protect your investments. What you are left with is to only rely on the management of those platforms to not disappear with your money. When talking about disappearing of P2P platforms, we have had this actually happening in the past. Many fraudulent platforms like Kycel, Investio, and Monetera offered high yields to their investors before they vanished with millions of euro. Groupier was another fraudulent platform that funded fake projects, and what you should know is that high yields were the main motivators why investors invested on those platforms. Platforms that offered too good to be true deals were mostly scams, and I have learned it the hard way myself, which is why I no longer invest on similar platforms that lack proper statistics, fail to educate their investors about their business models, or are not regulated. Chasing high interest rates is not worth it in my opinion. Investors will need to risk adjust the return, as the promoted yields are in many cases not even close to the reality. Now you might be thinking, alright, so if I avoid platforms with higher interest rates, is my P2P investment going to be safe? Well, it's not that easy. The problem here is that high interest rates are not the only indicator of higher risks. There are also players in the industry who offer lower rates, but the risk is still quite significant, which is why I highly recommend reading the terms and conditions and reaching out to the platforms before investing a significant amount of money. Not doing your research and not monitoring your performance is the perfect recipe to lose money sooner or later. But hey, luckily there is P2P Empower, and if you have been following this project, you have likely minimized at least some of your losses. Anyway, I'm curious to hear your stories and experiences with high-yielding platforms. Do you believe it's worth the risk? If you don't mind sharing, please add your thoughts in the comments below. So that's been it from me today. I hope you enjoyed this video. If so, give it a like and I will catch you in the next one.